Good morning, everyone. I'm Vince Lancy. This is the Gold Fix Market Rundown, and that's the front page. Lower right-hand corner, oil was the big mover yesterday. Top right-hand corner, that's an early look we just sent to founders. We'll be sending a premium version of that out today. It is the topic for this conversation, which is UBS's opinion on silver. Lower left-hand corner, that's an interview we do with Mario Monaco. Very pleasurable one. Broad topics from Roach Motels for silver shorts to neo-Keynesian religious fervor and beyond. So, and then BOA loves the silver is front and center. We're going to be talking about UBS getting ready to raise the silver roof. Their target is 38. We think they're going to raise it very soon. And they put out a very nice commentary that seems like a prelude to that or prelude, depending on how you say the word. Let's go through the markets. 10-year yields are 436, down 5. The dollar is 97.89, down 68. S&P 500 is 59.91, down 32. Gold's up 28. Silver's unchanged bid. Copper is unchanged. Oil is down a buck 34, giving back some of the move from yesterday. This is a little bit complex here. Natural gas up 8 cents. Bitcoin down 1,700. Palladium, platinum diverging the way platinum wants it to. Gold and silver a little bit higher. And grains unchanged bid around the board with wheat a little bit higher. All right, give me a second to think about this. All right, so stocks, bonds, and a dollar are discounting recession, looking towards a slowdown. Maybe the markets are looking at the geopolitical risk as more recessionary and calling for a rate cut. So they're not, this is not a stagflation behavior. Gold is up 2 days in a row. That's geopolitics. Oil is down today after being up a lot yesterday, 5%. So I'd say the 2 day combination is geopolitical unrest raised, and the stock market is saying, well, shit, with all this going on, uh, we're worried about a recession again. That's the take. And then you have various markets are also being influenced by their own market. So, for example, you buy gold, you're going to sell silver, but not as much as you used to. A lot of people got their asses handed to them again. All right, let's go to the story. Silver has rallied 26% year to date, driven by demand for US dollar alternatives and cheaper precious metal exposure, the UBS strategist and CIO reports yesterday. A breakout above 34.60 sparked fresh momentum interest, with ETF holdings and futures net longs both rising sharply. UBS expects silver to test 38 to 40 in the coming months. Their target's 38 amid sustained deficits and a weaker dollar. Now, we have that analysis broken down and broken out, and we'll be sending it out at noon today. There's that's the preview frame. With industrial demand stable and gold silver ratios normalizing, even minor shifts in investor allocation can move the market. UBS recommends staying long or selling downside for yield. Remember, that's their selling puts concept they did before, as volatility and relative valuation continue to support upside conviction. All right, we're going to have that again. We're going to have that sent out to premium subscribers today at noon, and founders already got a quick look at it. The phrase that they use frequently and that we're seeing spread to other banks with industrial demand stable, that means all the industrial slack that we've gotten in the market from recession fears, they believe has been priced in. And we talked about that yesterday. Silver sideways was the down move. Um, Gold silver ratio is normalizing, right? That's an opinion. We agree with that, but that's an opinion. Even minor shifts in investor allocation can move the market. It doesn't take much for to move silver now. I mean, we're talking about Eastern central banks are going to start buying it if they haven't already. Um, the higher it goes, the more they want it. That's silver. And it's not just FOMO retail investors. That's how central banks will start to look at silver. And there it is. Silver UBS adds upside potential to $40 now. Will be sent out at noon today. Related post. Bank of America loves the silver. We mentioned that yesterday. This interview with Mario Monaco was really fun to do. We talked about a lot of different topics. Found this early. Look, gold fix PM, oil and gold rise. Oil was up 5% yesterday. So welcome back, oil. It's about time. I continue to believe that gold is now the point of the commodity spear, even though I don't view gold as a commodity. Other commodities are going to rise because the higher gold goes in price and the longer it stays at that price, and the more it's used as an alternative to the dollar, well, things go from being priced in dollars to being priced in gold. So if half the world, humor me here, if half the world dumps dollars tomorrow and goes to gold as payment, just work with me. Then the commodities in half the world are no longer priced in dollars for trade. They may be priced in dollars on your CNBC screen, but oil is cheap in gold terms. Silver is cheap in gold terms. As gold becomes money, it raises all the dead commodities, like something out of Game of Thrones. Was that Game of Thrones? Yeah. Anyway, so that's the idea. Beijing leverages rare earth with 6-month export window. They do these things in 6-month increments anyway. So yes, it's a deadline, but also it's not abnormal for them to do that. Thomas Massey introduces bill to audit America's Fort Knox. Again, we believe that will not happen, but it certainly is something uh, to hope for and cheer for. And there's the report. Silver UBS adds upside potential to $40. We'd also add that Goldman has an opinion out on Goldman has a violently mixed opinion out on platinum right now. And we're going to take a look at that later on today, and we'll have something out for you on the weekend on it. I'm Vince. Have a great weekend, or have a great